What's up, YouTube? And I'm back again. If you guys don't know, my name is Nigel Schroeter. I bring you guys finance information daily. If you're new to the channel, please don't forget to like, comment, share, and most importantly, subscribe to the channel because I'm bringing you guys new content daily. Especially this week, you guys are going to be getting more and more Navy Federal strategies, and we're going to be reviewing some that we spoke on before. So definitely stay tuned in. So without further ado, let's go ahead and get into today's topic. Today, we're going to be talking about, should you apply for a credit limit increase or a new card? So this is going to be one of those strategies, one of those hacks that you can use to get high limit credit funding. And this works with multiple financial institutions, but most importantly, this works with Navy Federal Credit Union. So, one of the more prominent things to think about is a credit limit increase, because a lot of the times we think about the opportunity cost of a credit limit increase, because typically credit limit increases require us to get another hard check on our credit. A lot of the times you will see people tell you that there's this hack or strategy or whatever out there that you can lock your report and you won't get a hard inquiry from Navy Federal. It's actually not true. If you do lock it, there is times where Navy Federal will call you and have you unlock it. However, if you have it unlocked, they typically don't do a hard pull anyway. So generally, it's best to just go ahead and apply for the credit limit increase. And it makes it look less skeptical, and it's less likely to get triggered for a manual review if you're not trying to pull off little tricks like that. So the next thing, are there any cons to a credit limit increase? No, because you're keeping your same card. You're keeping your same account open. You're increasing the limit. So by increasing the limit, you're going to be dropping your utilization. So by dropping your utilization, as we always talk about with your FICO factors, your utilization is the highest weighing category on there next to your payment history. So if you can drop that utilization, in turn, you're going to be gaining a lot of points. So a credit limit increase is great for helping with that, decreasing your utilization. It gives you more available credit. So that's more credit for you to be able to leverage. There's more credit that you have at your disposal for you to choose what you want to use it for, rather it's in case of a rainy day, rather it's to create assets, rather it's to use for velocity banking, whatever it is, you have that credit available to you. Now, you're also able to apply for credit limit increases frequently. So you can always call them and apply for another credit limit increase. I've been told different things as far as credit limit increases. However, usually I recommend calling every 3 to 6 months and saying, hey, it's the opportunity for me to get a credit limit increase. I have been told by someone from Navy Federal, though, that it's best to wait longer. So maybe 6 months to a year to get that credit limit increase. Now, one of the things that's on the table and thought about a lot of the times with these credit limit increases is, do they affect your debt to income ratio? They actually do not affect your debt to income ratio, because your debt to income ratio only factors in your debt, which is a number, and your income, which is a number. And it has nothing to do with your utilization or your credit limit. It's about how much you spend of that credit limit and how much money you're making. So definitely don't let that get misconstrued with your DTI and your utilization, because those are two very different concepts that are involved in your credit cards. Now, let's talk about, on the contrary, opening up a new credit card. Now, if you want to open up a new credit card, this can affect you in many different ways. And you want to make sure that if you're opening new cards, new accounts, you're strategizing when you're opening them and you're really thinking about whether or not this card's going to benefit you in the short term, in the long term. Is it worth the opportunity cost to be applying for a new card right now? Should you be applying for multiple new cards at one time? Is it going to gravely affect your account age? If you have older accounts or younger accounts, how much is it going to affect your average age of accounts? Because that can gravely affect your credit score. If you only have one card open, even if that card's 8 years old, if you open up a new account, that cuts your credit age in half. So now that will cut you from 8 years to 4 years and potentially could drastically change your credit score. So it's really not about how many cards you have open, but the age and how you manage those cards. Could a new account help you to get some more payment history going? Do you need more positive payments revolving every month? What are you looking for? And that's when you kind of strategize and determine, is a new account for me. Now, as far as time frame, I get asked this question a lot, especially with 91.3 getting thrown around a lot, which is you can apply for a new card with Navy Federal every 91 days in 3 statements, and not or. So it gets thrown around a lot, and a lot of people just think, oh, I hit my 91.3, let me go apply instantly. Sometimes we need to hold our horses. Sometimes we need to calm down, rally our troops, and decide what all we really want. Do we want to, just rush out and apply for the card because we have the potential to get it? Or do we want to wait longer and potentially get a higher limit, potentially open ourselves up to more opportunity by waiting a little bit longer? So I always like to recommend waiting at least 4 months, if not 6 months. And on your third card, if you can, wait up to a year. Give your accounts time to age and progress and show the bank that you are really there to, use your accounts appropriately and that they can trust you with those credit limits. You want to be using your accounts appropriately throughout that time, revolving some money through those accounts. Make them active accounts and show the bank that you're responsible. You keep that long credit age, that low debt to income ratio, and your score is going to soar. So definitely think about that. Definitely, if you're going to open up a bunch of cards at one time, make sure that you have a strategy to opening multiple cards at one time. And, that's a good short term game. However, it also can be a good long term game or mid game if you play your cards right. Now, that is why it's so important to take the time out to strategize and determine, do I want the CLI or do I want the new card? The new card's going to give me a hard pull. The CLI is not. And which one better affects me or better allows me to grow in where I'm trying to get in my credit history? Because, of course, there are limitations to both. And the only real limitation with the credit limit increase is that you're not getting a new account with more payments. However, the credit limit increase is not going to bring your score down at all. When you apply for new accounts, you're going to get the hard inquiry. You're going to get a new account, which is going to lower your score temporarily. And then you have to play your cards right to bring your score back. So with all that being said, thank you all for watching. Thank you all for tuning in. Please stay tuned for the videos that are coming up, and make sure that you guys are checking out the channel, going back, watching prior videos, as well as staying tuned for our live streams and making sure that you guys are getting yourself immersed in learning as much as you can. And as always, thank you all for watching. We love you guys. We'll see you in the next video. And